Thanks, Chrissy, and good morning, ladies and gentlemen. It's great to be here again this year, and in particular at this stage with a really exciting chapter in Matsa. Matsa Gold, we're a Western Australian gold company on the ASX. MAT is the ticker. Very, very quickly, just shy of 1 million ounces in the Lake Kerry project at 2.5 grams. We've just got just a little bit over 100,000 ounces in reserve across a couple of projects, and I'll talk about those a little bit later. 49 million market cap as of last night at 733 million shares at 6.7 cents. We've got a good board there with commercial and accounting experience in Paul Poley and Andrew Chapman. I'm from an operational background and I bring the technical skills to the company. And we have Ratha Kiohansawang in Thailand heading our Thailand subsidiary. Very good backing from BNP Paribas and Deutsche Balaton. Recently we've had Bulletin Resources come on board and the flagship fund, and basically we've got the other shareholders just under 40%, so 60% of our shareholding, a very strong supporter base. What's Matsa? Matsa is a gold company with a lithium twist. We've got 4 facets to the business. By and large, it's Lake Kerry gold at the Yilgarn in Western Australia, and we're in a relatively unique position for the junior space, and we think we offer a very, very compelling case for investment. We have a fantastic exploration project in Fortitude North, and I'll talk about that a little bit later. We're putting boots and equipment on the ground at Devon Pit Gold Mine with expectation to commence mining in June this year. That's right, next month. And there's an asset, or it's a corporate level asset transaction with a company called Anglo Gold. And the twist of lithium is in regards to our Thailand project, where we have a very strong lithium project there that is garnering very, very strong support from the government. It's been a very, very busy start for us this year, and we're pleased to say that we announced a maiden gold reserve in Devon just earlier this year in January. And as Chrissy alluded to, in early February we were the subject of an unsolicited takeover bid on market by a company called Petronas. That has since, subsided. That ran out, the timing on that ran out in mid-March, and at this stage we haven't heard anything further news on that front. There's a fantastic high-grade intercept at Fortitude North, as I mentioned just before, 22 metres at 9 grams. That is a sensational grade in anyone's portfolio. In February, we released our feasibility study into Devon, and I'll talk about that fairly shortly as well. And as I mentioned just before, Lake Kerry, a dominant part of the project, is subject to a sale agreement there with Anglo Gold. We've got mining agreements and processing agreements executed for Devon, and we're ready to go. The guys are on the ground at the moment, and I'll show you some of the slides there too. We're poised to deliver shareholder growth. January last year, we were around 2.8 cents, and we've had a steady increase in our share price commensurate with the progress of the works, largely in terms of the Devon project, we believe, but also a significant interest in the Anglo Gold transaction. So how does Matsa look at the moment? A current share price of 6.7. As I said, we were 2.8 at the beginning of last year. So over the coming 18 months or so, this is what we're expecting to see. Devon, and as I mentioned with regards to the pre-feasibility study, delivers $73 million operational cash flow to the company, and I'll talk to I'll show you that in some of the slides next. If we add the proceeds of an Anglo Gold transaction, which is targeted at $101 million in total, with that comprises about 80.5 million in cash as part of the execution of the deal, with a trailing $20 million royalty. Fortitude North exploration, that's got to have some sort of value as well, and so does Thailand project. And as I mentioned just before, there's a trailing royalty on that, and it's not on a net smelter return, it's actually on discovered ounces. So I think it's fair to say at this stage it's a growing company, and certainly something substantial. That there is a picture of the Devon Pit gold mine. We're looking towards the south there, so we're looking away from Red October, and that's, as I mentioned before, we're on the ground right now preparing the site. Quick shout out to our mining partner, Blue Cap Mining, who are actually on the ground preparing the sites. And we're laying out the pipe work to commence dewatering of the pit. There's a couple of small pits there down to about 40 odd metres, so there's a little bit of water to get rid of, but we certainly can start mining before the dewatering is complete. And you'll see there, with regards to, I don't have it pointed, in terms of the pit design, you can see there the designs heading off into the northeast, accentuating the trends of the west lode and the main lode. FMR, so the Greenfields mill down near Coolgardie, is where we'll be processing our ore. As I mentioned just before, the Devon pit, we published our feasibility study at $4,250 Aussie gold price. You can see there, mining inventory just over 300,000 tonnes. It will mine at above 4.5 grams. That is pretty good grade. Life of mine around about 18 months, and at $4,250, the project delivers us around about $60 million. At today's, when we published the feasibility study, we also did an upside case at $4,550. Considering today's gold price is around about 5,200, it's a bit over that, I thought it prudent to demonstrate what the outlook looks like at $5,000 an ounce Australian, and the project will give us just under $100 million. Key financial metrics: mining is a little bit under 60 million, haulage and processing both around the 25-26 million mark, and the net revenue after royalties is just under $210 million. And that's all within 18 months. Just a quick snapshot of the mine plan there. You can see there by quarter the ounces mined. Around about 4,500 ounces, nearly 5,000 ounces in the first quarter, and then a steady increase there with a tail at the end of the mine. There's no lead time to production, and that's one of the key elements. When we hit the ground in June, we will be producing ore from day one. That there's the gold sold. What we'll be doing is campaign processing down at the FMR or Greenfields plant. Essentially what we'll do is we'll mine and stockpile ore for about 3 months or so, and then we'll take it down and have a 2-week window for processing around about every quarter. And the first quarter we'll be doing that is in September 2025, so it's not that far off. Just a quick one with regards to mine design there. You can see there it's a staged approach. We'll start with the green shape, extend into the blue shape there, and then extend to the northwest into the 2 minor lodes as they trend to the northwest. Mining equipment, standard open pit mining, excavators, trucks, shovels, those sort of things, and support rigs, support equipment, cars, and drilling rigs. We already have a 72-person camp at Red October. That's at the moment we're fully manning that up, and we're getting it ready for the operation as well. And as I mentioned before, metallurgical and processing. So the processing will take place at near Coolgardie. It's about 280 clicks south of our mine, but in terms of the cost structure, it does produce a favourable outcome for us. By and large, the deal is structured that it's based on a throughput rate. The more dirt that we put through the mill on a per day basis brings efficiencies, and therefore the cost structure comes down as well. At this stage, based on 2,800 tonnes processed per day, the cost will be $75 a tonne. One of the important things about the processing is that third-party processing agreements typically have a link to rising gold price, so that with a rising gold price, your actual processing cost per tonne actually also go up. In this instance, ours is strictly related to throughput rate, so even with an escalating gold price, our cost remains 75 unless we push through a bit faster, in which case it will come down. So it's very favourable for us. As I mentioned, the camp, just a quick picture there. It's all set up, it's ready to go. We have haul roads in place. We've got airstrips available as well. Just a quick one with regards to the Lake Carey project. It comprises of 3 mines, Fortitude, Devon and Lake Carey, and Red October itself. Great pipeline of exploration projects. Why is it important? And that's important because of the Anglo transaction. So very quickly, there's an option fee of $8 million. $4.5 million, we expect to see that in around about 3 or 4 weeks once the final conditions have been met. It's based on a formula of 1.875% of the gold price times 936,000 ounces, which is what we had on the books at the time that we signed the agreement. At the time when we reached a high-level agreement, the gold price in Australia was $3,200. Now at $5,200, that's a significant change to the deal. Initially, it was around about $63 million. At today's price, it's well over $100 million. It's $107 million. And as I mentioned before, there's a deferred $20 million trailing royalty, and it's based on resources found, not mined ounces. So just quickly, how it's the schedule. $500,000 was paid once we completed signed up on the agreement. We're expecting $4.5 million in the course of the next 4 weeks once all conditions have been met. 6 months thereafter, another $1.5 million. 6 months thereafter, another $1.5 million, and then the balance 6 months later. The whispers from the Anglo camp is that there's potential that they will accelerate this deal. What that means in terms of actual timing, I'm not entirely sure just yet, but there's a potential that it's done certainly within, much faster than within the 18 months. Fortitude North, as I mentioned, a terrific exploration play. 22 metres at 9 grams was the most recent intercept. We followed that up with a bit of drilling. I'll show you that in a moment. You can see there Fortitude gold mine, which has got just shy of 500,000 ounce resource at the moment. That's part of the Anglo deal. Heading towards the north-northwest, you can see a bit of a white line. It's associated with a strong magnetic response there, and that's where Fortitude is. Fortitude North is. Just here is a list of exploration or drilling results. You can see here there's about 12 or so. The 7 of the top 12 were drilled in 2023. That was an RC program, and it's on the top right-hand side of the picture there, you can see a whole bunch of different colours of little triangles and that. That's where the drilling was. You might be able to make out the yellow lines. The middle one there going from the right to the left is a drill hole that we completed earlier this year at 22 metres at 9 grams. We've followed up with a couple of other holes, and just awaiting completion of the logging and then the assays for that. That there, as I said, a sensational intercept. In terms of the modelling, what we believe is there is a moderate to low-grade system with a number of high-grade shoots, and you can see those in the red dipping off there to the right-hand, bottom right-hand of the page. So what's next? Gold mining will commence at Devon in the next 5 to 6 weeks. First ore campaign processing will be in September. We'll be doing some more drilling at Fortitude North. Just there on the right-hand side is a very quick snapshot of the cash flow based on 4550, which is out of the feasibility study. We're going to progress the Anglo deal, and if those that are interested, there's plenty to talk about Thailand. We're in booth 27. I encourage you to come and have a chat. We've got a few more pictures, and I can talk a bit more detail about what we're doing there. Thank you.